Good morning. This is Connor from 0DTE Traders here to present the week ahead for January 26, 2026. Let's dive in. To start the week, GEX, which measures dealer gamma exposure, is more neutral than imbalanced at 10 million notional, essentially where we started the week prior at. Of course, we saw quite a bit of volatility last week, more so to the first half of that week, moving materially negative, 840 million notional, into our downside target and lower bound, 6,800, which is referred to as our put wall. This is simply the strike with the highest net negative gamma, and that remains unchanged this week. Transitional level, our main transitional level, which is our flip metric, shows at 69.25. As you can see, all strikes above positive, that is supportive for the market price. Most strikes below negative, that is destabilizing for the market price. Another key transitional level to pay attention to is 6,900. This has been sort of a key risk pivot for several weeks now, so bullish above, bearish below. Other levels to focus on here is 69.50 on the upside. This could be substantial resistance. If we do break above, gamma will become materially positive, so that's where that gamma index will continue to move north. And more supportive flows should come into the market as dealers buy dips and sell rips. In terms of the upside target, 7,000, still teasing bulls. This is what's referred to as our call wall, essentially the opposite of the put wall, the strike with the highest net positive gamma, so that's regarded as our upside target and upper bound. The SPY call wall is 700, which is SPX 7023 equivalent. And given the fact that the SPX 7000 handle is very balanced, all right, so this is what we refer to as the absolute gamma strike, the strike with the highest total gamma, calls plus puts. It could be quite sticky and prone to break. So if we do manage to break above it, we view SPY 700 as that target. As of right now, we're trading in this neutral zone. So it could really go either way this week, to the upside, to the downside, or it could be quite benign, but we have a lot of catalysts that could spark volatility. Turning to the SPX chart on the 1 hour time frame, the short-term trend is up after printing the low last Tuesday, nearly bouncing right off the put wall. We did overrun it a little bit to that 5-day implied move at 67.87 last week, if I recall correctly. But since that bounce, we have been putting in a series of higher lows. So higher low, higher low, higher low, higher low. Now these are marginal higher lows, but still holding that uptrend with an upsloping trend line more or less connecting those lows. And we're essentially at the apex point now. There's also a minor downsloping trend line connecting the highs over the past two trading sessions. So as we see here on Friday, price did put in a lower high, which is technically a bearish indication. But this is a nice consolidation pattern over the past 2 days with a clear upper bound, 69.25, 69.30. A break opens the door to that 50 handle, maybe some downsloping resistance here, but really the major resistance level on the upside is 69.75, 69.86, which is the all-time high, as you see here, right? Resistance, and then 7,000 ABS call wall. And we've tested this, let's call it this zone here, several times, maybe 1, 2, 3, 4, 3, 4 times now. So as we know, the more times we test a level, the more prone it is to break. And there's a good chance if we get up there this week, we actually get that breakout to that 7,000 handle and possibly beyond. As far as the downside goes, that lower bound is 6,900, 68.93. This is the SPY flip equivalent. A break opens the door to a gap on the downside. Fill is about 68.76. And then we got 68.75, which is technically our zero gamma level. But as you can see here on the chart, this was resistance last week. We broke out. We confirmed it as support. So potential support this week. But if we do break it, it opens the door back down to that 6,800 put wall with a lot of gaps below. Popping over to the VIX on the 1 hour chart, VIX is up here in the early pre-market, plus 4%, trading at 16.7, curling up off that lower bound. Effective lower bound 15.315. 15.3 marked the low last week. Potential resistance, or I guess now support, 16.2. Resistance 17.5, 19. Now this may not have the same sort of significance as it did last week, particularly to the first half of the week, as it was the max pain going into that Wednesday VIX option expiration. But 20 above that remains significant. It is a very heavy call dominant strike. And then above that, 21, which marked the peak last week. In terms of, I would say, other levels, there's probably a lot of little levels in here. But in the event we do sort of get a risk-off move, 2021, I think, remains a potential target. And VIX remains key for market direction. It is not Gamma running the show right now. It is all about volatility. And it is the season for volatility. If we look at VIX seasonality, it does have a tendency to rise from late December into January, February, and March, peaking at about 20 to 30% relative deviation. Of course, it doesn't necessarily need to play out exactly like this, but point is, more often than not, we do see elevated vol activity in Q1. It's going to be a busy week. We have big tech earnings and the Federal Reserve in focus. The FOMC rate decision is due out Wednesday, and as of now, there is a 97.2% probability of no rate change. So attention will shift to Powell's press conference for guidance on timing and pace of future easing. On the economic calendar, durable goods, jobless claims, PPI. So we do have some economic data here that could potentially move markets as well. But I think what's in the spotlight here is going to be big tech earnings. So we got Apple, Microsoft, Meta, Tesla. I mean, just a jam-packed calendar. And of course, potential to invoke material buy and sell flows that could not only move these stocks, but move the S&P 500 because these names have very heavy weighting in the S&P 500. Lastly, let's do a quick performance check. This year, 2026, off to a good start. I actually haven't had a losing trade yet this year. Now, I did take a bit of a week off, not intentionally. I did transfer my brokerage over to a different jurisdiction, so I didn't have access to trade for a week. So my number of trades are a little bit lower than usual. But so far, so good. Last week, a great week. I traded a combination of single options, so 2 long puts, 1 long call, and a long butterfly. All trades above 100% ROI, with the best trade being about 376% ROI. And my focus last week, just given the elevated volatility, sort of the unpredictable nature when trading below, that transitional level, the flip, I tend to be a little bit more cautious. So I'm likely going to exhibit that same approach here this week. So if conditions support a trending day, look to enter on the first counter move in the direction of the trend. If it looks to be more neutral, a mean reversion day, look for that pivot point around 12 or 2 o'clock, as we often see pivots around that time.